Today we are focusing on the Kiddie Tax rules, a topic the exam loves to test through scenario-based questions. The core purpose of the Kiddie Tax is to prevent parents from shifting their unearned income, like interest and dividends, to their children to take advantage of a child's lower tax bracket. The exam will test your ability to calculate this tax correctly using specific thresholds. The rule applies to children with unearned income who are under age 19 at the end of the tax year, or under age 24 if they are a full-time student, provided their earned income doesn't cover more than half of their own support. Let's walk through an exam-style example using the 2025 figures. Imagine a 16-year-old child, Liam, who has $5,000 in dividend income and no earned income. His parents are in the 32% marginal tax bracket. The exam will ask you to calculate his total tax liability. First, we determine how much of Liam's unearned income is taxable. A child's standard deduction for unearned income is limited. For 2025, that amount is $1,300. So, we subtract this from his $5,000 of dividends, leaving $3,700 of taxable unearned income. This is where the tiered system comes in, which is a critical point for the exam. The first $1,300 of this taxable income is taxed at the child's own rate, which is typically the 10% bracket for ordinary dividends. So $1,300 times 10% is $130. The remaining income is the amount that gets taxed at the parent's higher rate. In this case, that's $3,700 minus the first $1,300, which equals $2,400. This $2,400 is taxed at the parent's 32% rate, resulting in a tax of $768. Liam's total tax liability, which is calculated on Form 8615, is the sum of these two amounts, $130 plus $768, for a total of $898. A common exam trap involves mixing earned and unearned income. If the question states Liam also earned $3,000 from a summer job, that earned income is completely separate and is not subject to the Kiddie Tax. It is taxed at his own rates after applying his standard deduction. The Kiddie Tax formula applies only to the unearned income portion. Another trap is the optional Form 8814, the election to include a child's income on the parent's return. The exam will test the strict conditions for this election. It's only allowed if the child's gross income is solely from interest and dividends, is more than $1,300 but less than $13,000 for 2025, and no estimated tax payments were made in the child's name. If the child has any capital gains, for example, Form 8814 cannot be used, and the parents must file a separate return for the child and attach Form 8615. To remember the key thresholds for the unearned income calculation, use this phrase, 1,300 free, 1,300 me. The rest is parent's fee. This helps you recall that the first $1,300 is offset by the standard deduction. The next $1,300 is taxed at the child's rate, and everything above that is taxed at the parent's rate. Master this calculation and the exceptions, and you will be prepared for any Kiddie Tax question on the exam.